Hello, everyone, and welcome to another edition of the Forex Technical Market Update for Tuesday, August 25th, 2015. And what a wild ride we had yesterday. I recorded the market update early in the morning, and we saw a huge down move in the Japanese yen. And what I've been saying was that expect a yen rise in the event that the stock market broke below its support points. And for those of you who missed it, what we had yesterday or what we had on Friday was a classic move down where the market broke out of support and we got huge follow through in the markets. Now that move caught a lot of folks by surprise, but really that's why it's important, and it's important to pay attention to what the markets are doing, pay attention to what price action is doing, because that will definitely keep you on the correct side of these markets. And that's exactly what happened with S&P 500. And that's why, in addition to the Forex market, I like to trade other markets, because this was a wonderful opportunity for a short. Once the market broke this level, could have shorted the market to the downside for a couple of S&P 500 points. Okay, so we saw a huge move in the Japanese yen down, but remember, the Japanese yen still has not broken this swing low. We see the swing low here near this 116 level. Market has not broken down below this 116 level, and if it remains above this 116 level, that could be bullish and we could see a recovery in the Japanese yen. It just really depends on what the stock market is doing. I think it's taking its cue from the stock market at this point. If we close below this 116 level, that could signal that this larger move to the upside will retrace even further, maybe to 112 or 108, or it could be the end of the uptrend in the Japanese yen that has really lasted for a number of years, essentially. This uptrend started in 2012. Market bottomed in 2011, actually. Market bottomed in 2011 near the 75 level, and we topped out near 125. So as you can see, that was a huge uptrend in the Japanese yen. I'm not saying it's over now, but that's over a 5,000 pip move, and we could see this market retrace back further if these levels that I said are broken. Anyway, so that's a bit long term. Taking a look at the euro. The euro yesterday broke out of its consolidation pattern, and we have been speaking about this consolidation pattern over the last couple of months. Really, we have been saying that the euro is in a consolidation and we're looking for a breakout. So this breakout has occurred. So really, how do you play this breakout? Normally, after a breakout, the market can do two things. Market can either just continue upwards, like what you saw in the S&P 500. Well, in the S&P 500, it went down. But after a breakout, the market can just continue up, or what we could see is a return to the point of breakout, test support, flirt around the trend line, and then head to the upside. Well, I guess a third possibility is that the market could just reverse and come right back in. These markets can do anything, but the rule is that it could test support and then head to the upside. So we should be looking out, or we could be looking out for that scenario in the euro. It's not all the time you have a breakout. The market just continues up and up and up. So look at support near this 114 level in the euro. Okay, taking a look at the brown market is trading positive, and we have resistance above 159 at 159.30. Resistance at 159.30. We're currently at 157.84. So we're 50, 60 pips below that level, and look to see if this market can close above that swing high that was made back in June. Canadian dollar this morning pulling back slightly after yesterday the market was made a new high, and the high that was made was at 132.89. Well, this morning we saw 132.98, 132.89, 132.98, 10 pips above, but the market has pulled back. And we're, as we said in the market updates, we're looking to see if the market can close above this swing high for the month. It's now the 25th. We have just a couple more trading days left in the month, and if the market closes above this swing high here, market close above that 130 level, that could spell even further losses for the Canadian dollar. Curiously, yesterday the Australian dollar was also down big. So while the euro was up considerably, the Australian dollar made a new low into the $70 level. We're getting some pullback this morning, but this market still remains fairly bearish, and it just goes to show that these trends can definitely last a long time, because this market peaked out in May, and we're currently in August, where the market is making a new low. Okay, so in terms of gold is not really doing much. I mean, a lot of folks are saying that with gold, when you have a huge stock market sell-off, gold could spike to the upside, but we just really have not seen that, and that is the prices are telling us that this could be stalling out. Gold looks like it could be stalling out in the 1160 area. Okay, so we have some exciting times ahead of us in the markets. A lot of these currencies have broken out of consolidation, and we could see some strong movements in the weeks to come. If you'd like to take advantage of these movements and take advantage of this volatility, what you could do is click on the link below to get started with the Forex signals. The signals will be sent directly to your brokerage account. And what we do is manage risks fairly well and position your portfolio for upside potential. And what we do is follow a strict trend following method to approaching to trading. So click on the link below to get started with the signals, because as I said before, we're in for some exciting times in the markets now that these currencies have broken out of their resistance or their consolidation. Thank you very much for listening, and I hope you have a wonderful day.